Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 Eastern on Friday, April 1st. Happy April Fool's Day. Wall Street started the second quarter with losses today after data showed non-farm payrolls increased 215,000 in March, more than the 205,000 estimated. This sign of economic strength that could allow the Federal Reserve to gradually raise interest rates this year, the Labor Department's report showed while traders are pricing in only one rate hike in 2016, the odds are now about 1 in 3 chance of a hike in June and a better than ever chance, or better than even chance, I should say, of one by September based on the price of the Fed funds futures contracts. Stocks are also under pressure from a 4% fall in crude prices this morning amid increasing skepticism that a looming deal to freeze crude production will help clear a global glut. And on that cheerful note, let's go forward and look at 3 charts that could give us some insight into the week to come. First of all, we're going to look at our usual chart of the S&P 500 spider, symbol SPY. As you all know, this is the ETF or tracking stock that closely follows our S&P 500 index. Now, we know that since the last high in December of 2015 of $202.46, the S&P fell down to a low here about 181, rallied back up to about 195 at the end of January, fell back down in February and retraced that move, and then since then has moved up in an absolutely beautiful picture-perfect uptrend back up to just about these prior highs. On Wednesday of this week, the high for the SPY was $206.87, which is about 2068 on the S&P 500 itself. So now, as you see, we have resistance. I had talked to you during the last couple of months about these people up here, these mad people, these scared people, and how they would sell and exert, or potentially sell and exert pressure on the S&P as it moved back up. Well, the S&P has been very resilient. It's a wonder. It's amazing, I should say, what low interest rates will do for a group of stocks. But anyway, hey, resilience works, and the S&P has made its way all the way back up. It's trading above its 20-day moving average, its 50-day moving average, the black line on this chart, and the 50-day moving average is down below the green line on this chart. So it's made its way back up. Now, whether it can continue to move up, again, still into these mad and scared people from last December and actually the last quarter of last year, can it do so as we move into first quarter earnings period? We ended the first quarter on this Thursday, on March 31st, and now we're headed into the second quarter. So we're going to experience first quarter earnings during let's say the last 3 weeks of April. So that's coming up pretty soon here. That should add some volatility as companies report. If we look down on this chart, we can see that the SPY is up near, it has been up near overbought territory. That's like too much ice cream. That's really, really good, but it looks like the RSI could use a rest here on the MACD is plotted over the volume spikes, and it's giving in a little bit here too. As I said before, and I've said for the last couple of weeks, I suspect the SPY, after such a run up and back up 13%, I think it's going to need to rest here somewhere along the way. So we'll keep an eye on it. There's support at 202. There is support at 201. Well, I can't draw a straight line here. Support at 200, which is 2,000 on the S&P 500 itself. So we'll have to see here if it needs to take a rest in the coming week, or if it will just move potentially move in a range between 202 and 205. We'll have to see what happens here. But any long positions I'm going into now, I'm doing so with very small position size. The point is to buy low, sell high, not buy high and sell low. Our next chart today is a weekly chart of the iShares Russell 2000 ETF, the IWM. As I've mentioned to you before, the IWM consists of mostly domestic stocks, domestic to the United States. These are the small caps, small capitalization companies that are in the Russell 2000. And many times, the Russell 2000, in this form, the IWM, will act as a leading indicator for the broader markets. Now, this weekly chart, it's always good to look at a longer term chart versus just looking at daily charts and intraday charts. And as you can see here, the IWM has had a pretty rough year itself, moving down from up about 112 at the beginning of this year down to 95. It has moved up in a fantastic way, but now it too is coming into overhead resistance. When I captured this chart today, it's trading at $110.03. The RSI is in a nice uptrend on this weekly chart, moving higher. Certainly the MACD is starting up. Volume is pretty decent. What we have to see here is, again, these are more scared and mad people, all the way up here to about 100 and not quite, but almost 130 on the iShares Russell 2000, looking back to the highs of 2015. So for the IWM to push up here, push up over 110, move into 114 and back up to 115, it's going to have to absorb the supply that these people up here who bought high could potentially put onto the IWM as it moves higher. And the question is, will the supply be able to knock down the demand, or will the demand absorb the supply? If the IWM here has to noodle around between 105 and 110, that makes sense. If it can move higher during earnings season, that will be fantastic. But if it also has to rest here, as it looks like it may to me, and head back down, there's all kinds of support here at 105, at 103, and on down. What we don't want to see, of course, is that we don't want it to move below 95. So this is kind of, for all of these indexes, this is kind of where the rubber meets the road. We see if they can push on up. If we have enough good news coming into this market to push them up, can they overcome and move back to their all-time highs from the middle of 2015? Or do they have to rest a little bit here, as practically every major index has moved up since February in quite a big move. Our last chart for the day is the SPDR S&P Biotech ETF, symbol XBI. Now, last week we looked at healthcare providers. This time I'm looking at Biotechs. I always think I think Biotechs definitely are going to be just put out phenomenal products in the future, and I'm looking long term here. I know that that healthcare has sold off recently. Most every chart I looked at is overbought for all of the sector and industry group ETFs. The ones I've seen that I like lately are the healthcare providers, which we talked about last week, and by the way, that is higher as I looked at it today. I'm looking at the SPDR, again, S&P Biotech ETF, the XBI. I'd rather get in ETFs many times than I would single biotech companies, because they go by clinical trials, and if they have a clinical trial, they can fall dramatically. But if you're diversified in a biotechnology ETF, you don't take that big hit with one company, just one company going down, because it has so many more to support them. I want to see here, I'm keeping an eye on the XBI into next week. I want to see If this is a low base here, it came down to lows in February of about 45. It's since moved up from that. I want to see if the XBI can build a base here and start moving higher. Now, some of the top components in the XBI are Acadia Pharmaceuticals, Intercept, Novavax, Amgen, Gilead. You know all those big names. And again, I'd rather be in an ETF in Biotechs many times than I would a single company. So what I want to see here is if the XBI, when I captured it today, it's trading at $52.24. I like this pattern of coming down and touching these lows here just above 45 a couple of times and then moving higher. And actually today, so far the XBI is moving higher on a negative day in the market, which always connotes strength. The RSI here is trending nicely higher, actually more of a bullish divergence here as the XBI is sort of going sideways. I want to see if it breaks out. It had nice volume yesterday. I want to see if the MACD can rise over the zero line. Any purchases I make in the next week are going to be very small share size. The XBI is trading above its 50 and 20-day moving averages. I'm going to see here if it can move up into the $53 area, perhaps even up toward 55. If it breaks out up and closes around 55, then I would say that the XBI looks like it could have a chance to go higher. So it's something you may want to keep an eye on in coming weeks. Now we'll go on to next week's economic reports. But first, please check out our brand new, hot off the presses, Supercharge Your Brain for Maximum Profits. Diane Alexander, who is a psychologist and neuroscientist, and I have developed this program to show you how to power up your brain and earn more money trading and investing. This is a revolutionary new concept that can help you make breakthroughs in your financial future. Trade Like a Master is being offered now for an extremely low price, but this price is going to be raised this Sunday night, April 3rd at midnight. So don't miss out. Check out the link on this screen for more information. For this week's economic reports, on Tuesday we have ISM services. Wednesday, we have crude inventories and the FOMC minutes. Thursday, we have weekly jobless claims and not much going on Friday. Excuse me. Again, please be sure to check out Trade Like a Master. Go to tonyturner.com/supercharge. You'll be glad you did. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.